Hello, everyone. Welcome to the last class of the Performance Management YouTube revisions powered by IIC Lakshya. I'm your faculty, Janki Panchal, and we have been doing 2 days together of performance management in understanding how the paper works, in understanding some important topics. And today I have brought you a specimen paper directly from the ACCA CBE platform. Right. So today in the class, we are going to do a question paper which is picked up from the CBE platform. And if you notice, I am on the CBE platform itself. So you can understand how to deal with a question when it is on the screen. Right. Now, as I said in my earlier classes, that students do ask me questions, would they be allowed working paper in the examination? Would they be allowed a calculator in the examination? So the answer to that is very simple. It completely depends upon the invigilator. If they do allow you, well and good. If they don't, then you need to be ready to use the calculator that is given on the exam paper itself, right? So there are two modes of calculator available, the scientific mode and the standard mode. So whichever mode you want to use, you can use out from here. There is a scratch pad also available on the platform itself, so you can, calculate your answers here and then find out your final answer on the sheet. There's a strike and a highlighter. Highlighter really helps you in the examination because, yesterday I was highlighting important points. You can do the same when you're giving the examination paper, right? So on that note, let's start this paper. Obviously, I'm going to explain you and I'm going to go through it. So it might take me a little longer, but with practice, your paper should comparatively be finished in a earlier time as to what I would have done it. Right? So practice, practice, practice. That is how you will improve your time management. PM papers are not difficult, they are tricky and they require time. So, the more you practice, the better it is for you to give the paper efficiently, right? Okay, let's start with the first question here. What does the question tell us? A company manufactures two products, C and D, for which the following information is available. So your budgeted production hours are given, product C and product D separately. Labor hours per unit in total is given 8 and 10. Number of production runs required 13 and 15. Number of inspections during production 5 and 3. Total production setup cost is 1,40,000. Total inspection cost is 80,000 and overhead cost is 96,000. Other overhead costs are absorbed on the labor hour basis. What are we supposed to do here? It's a simple question of ABC. What is the budgeted overhead cost only for product D? There are a few steps in this. We do know it. But the best part is not getting overwhelmed with the question because the numbers are simple, right? Calculatable, nothing which cannot be handled. And directly jump to, if you know the question, if you are comfortable with costing, directly jump to solving the question, right? So when we do that, we are going to say, first we need to find out the individual cost, right? So setup. Setup needs to be related to the runs, right? Inspection needs to be related to the inspections. Overhead cost is based on labor hour basis. So overheads will be based on the labor hours. But these labor hours are per unit. So when you want to find out the labor hours for overhead, you need to multiply this with 1,000 and this with 4,000, right? So let's find out our per unit values, which is setup, inspection, overhead. Setup is going to be 1,40,000 divided by the runs, 28. Inspection is 80,000 divided by, sorry, the runs are 28. Yeah, inspection is 8. And overheads are 96 divided by 40,000 here and 8,000 here, so 48,000. Right? I've calculated the values that come to 5,000, 10,000, and $2. Right? First step done. This is your first step. Second step is where you need to find out the cost of product D. So we're just going to focus on product D, right? How many setups do you require for D? 15. So I'm going to do 15 into 5,000. Inspections, 3. 3 into 10,000. And number of overhead costs, right? So 40,000. So that's going to be 40,000 into 2. This comes to 75,000, 30,000, 80,000, totaling up to 1,85,000. Now, because we need to find out the cost per unit, this is the aggregate for all the units, for all the 4,000 units, right? 4,000 units cost. This is. We want to find out per unit cost. So what am I going to do? 1,85,000 divided by 4,000, giving me a value of 46.25. Understood? Yeah, I told you there are a couple of steps here, but the numbers are pretty simple. Now, where do students make a mistake? Students ideally, if they cannot find out, if you cannot find out the keywords, like, when in my classes, I've told you that if you are doing ABC, product setup, inspection, inspection, right? And also, I told you in the classes, if you are one of the class students, that if there are no relevant terms or keywords, what you can do is you can leave that particular right at the end and then you can mix and match it with the left one out, right? The same logic stands here. If you see production setup word is not mentioned in any of these costs, right? So what do you end up doing it? You will just look at the one word previous, production, right? And because this is a two-marker question, the examiners make sure that they don't make it very, very difficult. I'm so sorry. Right, so I don't think you should have a problem with this. And overheads, read the question properly. You will not be having a trouble. Even the labor hour per basis, read the question properly, right? This labor hour is per unit. You need to find out the total labor hours, right? So that's why you multiply your per units with the total labor hours, right? In this question, that 48,000 is also given to you. Just in case if it is not given, we should be ready to figure out how to get your total labor hours, right? Quick question. Maybe if you are just starting to practice your costing questions, you might find it difficult. I don't disagree to that. But as I said, we have time, we would practice and we would improve, right? So sorry, let's go to the next one. Yeah. LMP has identified the trend line relating to its sales revenue of 2000 plus 25x. X denotes the quarter number, with the first quarter of 2015 being 13, second quarter being 14, and etc. LMP company uses the multiplicative model and has calculated the following seasonal variations. You need to find it for the second quarter of 2017, right? Now, second quarter of 2015 to the second quarter of 2017. If this is 14, how many is this? Right? So what you're going to do is you're just going to add up, right? After 15, there are two more quarters in 2015. So 2 plus 4 quarters of 2016, right? Plus 2 quarters. So if I'm going to add 8 to it, 2 quarters, because I'm going to find out the second quarter, right? So this is going to be 22, and hence second quarter of 2017 is going to be 22, which is the value of X. It's going to be 2000 into 25, sorry, 2000 plus 25 multiplied by 22. This figure comes out to be 2550. And this 2550 now, if you notice, we have to use the multiplicative model, right? LMP uses the model with a seasonal variation of second quarter stands to 0.08. That means 8%. So it's going to be 1 minus 8%, right? And you will get your value, which is equal to 2346. So your answer here is 2346. A very, very simple multiplicative calculations of trend analysis, right? Something which you end up not seeing a lot in the examinations if if you see previous specimens or previous past paper exams. But nowadays, like this is the recent one that I have seen, and I saw that there was a multiplicative model, and that is when I decided that I need to get this on board because students do lose a touch on this, and it's not very difficult to do them. Yeah. For example, if this was an additive model, then apart from this, this would just be a plus, right? So as simple as that, right? Just a second. Right. Next, go to the next one. P company makes two products, P1 and P2. The budgeted details for each product are as follows. Selling price is given for both. Direct material, direct labor, variable overhead is given, fixed overhead is given, and profit per unit is given. Budgeted productions and sales for the year ended 30th November 2015 are P1 10,000, P2 12,500. The fixed overhead cost included in P1 relates to the apportionment of general overhead cost only. However, P2 also includes a specific cost of 2,500. If only P1 were to be made, how many units would need to be sold to achieve a target profit of 60,000 each year? Even this is something which is sometimes long lost by the students, where we talk about the target cost, right? And the formula here is pretty simple. If you want to find out your cost, what you got to do is, sorry, you find out your desired or target profit, you need to take your fixed cost plus you need to take your target profit and you divide it by the contribution, right? This is the formula. Fixed cost, now just because we are finding it only for P1, I'm going to concentrate only on this values, right? So P1's fixed cost is this, and this is per unit. So I'm going to multiply that with your 10,000 units. So that is going to be 1.2 into 10,000, right? plus our desired profit of 60,000 and divided by the contribution, right? But before doing that, we need to find out our total fixed cost, which we don't have right now, right? So what I'm going to do is I'm going to find out my total fixed cost first. Just a second, right? So we need to focus on the P1s still, but we need to find out our fixed cost, right? So the fixed cost is 1.2 into 10,000 units plus 1 into 12,500 units, right? So 1.2 into 12,000 plus this minus your 2,500, right? So that comes to 22,000. And now we have our contribution. So now we got my fixed cost, right? My contribution is going to be, so either I can take 3.2 plus 1.2, or I can take my selling price minus all the variable cost. The value is going to be exactly the same. Right? So let me just take 22,000 plus my target or desired profit divide by 4.4, which is here 1.2 and 3.2. Right? So this value comes to 18636 units. 18636 units, right? What I've done here, I'll just give you a quick recap of what I did. I have just taken the fixed cost of the first value, the fixed cost of the second one, which is the second product, P2, deducted our 2,500 out of it, which is the overhead cost only for P2, and we cannot put it as a general cost, right? And then we carry forward with that. Theory question. Which of the two statements regarding environmental costing are true? Right now, if you know which are true in any question, well and good. Otherwise, you can always look for the art of elimination. That means what is incorrect. The majority of environmental costs are already captured within a typical organization's accounting system, and difficulty lies in identifying them. That is very true. Environmental cost is something which you cannot find out easily. Input-output analysis divides material flow within organization into three categories: material flow, system flow, and delivery and disposal flow. Now that is incorrect because input-output looks into the raw materials that go into the organization's process, and then how does that bring out the value, like what you have put in and what comes out, right? So that is the input-output. So definitely this is a wrong answer. One of the cost category used in environmental activity-based costing is environmental-driven cost, used for cost which can be directly traced at a cost center. Activity costing, environmental activity costing does have environmental-driven cost, but sometimes I am not sure if the cost center comes to that. So I'm going to wait for the last one to be read. Environmental life cycle costing enables environmental cost from the design stage to the product right to the decommissioning of the end of the life to be considered. Now, this is correct for sure, right? And that is why you end up picking up this answer. You can strike this, right? Let's go to the next one. Product X to produce 19 liters of product X, a standard input mix of 8 liters of chemical A is required, right? So 12 liters of chemical B is required. Sorry. To produce 19 liters of product X, a standard input mix of 8 liters of chemical A and 12 liters of chemical B is required. right? Now, what does that mean? That means that there is a wastage of 1 liter, right? From the first line itself, we find out that 19 liters is produced when A and B. If we talk about A and B, then 8 liters of A and 12 liters of B is required. Chemical A has a standard cost of $20. B has a standard cost of $25. During September, the actual results were, now this is the standard, right? The actuals are 1850 liters of product X were produced using a total output of 900 liters of A and 1100 liters of B. The actual cost of A and B were the standard, which is the same. Now we need to figure out which of the statement is true. So let's see what are the statement options. Both variants are adverse, both are favorable. Mix is adverse and yield is favorable. Mix is favorable and the yield is adverse. Now let's see what the answer comes out to be. For finding out the mix variance, right, I've got A and I've got B. AQSM, AQAM, R variance, price, and variance in dollars, right? So this is how we put it. AQAM is already given in the question, which is 1100 and 800, bringing it to 2000. This 2000 will be distributed to the others, right, in a proportion of 8 and 12. So it's simple, 800 and 1200. The variance is standard minus actual, which is 100 adverse, and here it is going to be 100 favorable. Mm, sorry, A was used how much? 900, and B is used 1100. Yeah, so 100 adverse and 100 favorable. There is no difference. 20 and 25, no difference. So this is going to be 2000 adverse and 2500 favorable, right? So that is a 500 of favorable, right? So definitely my variance mix is favorable. Now I can look for the second one, which is yield, A and B. So SQSM, AQSM, which we have already found out, variance, dollars, difference, right? This value we have found out earlier, 800 and 1200, right? Now, when we talk about the yield, we need to use little logic here, right? If 18, so normally what happens is when 19 liters is to be produced, 20 liters of raw material is required. So if 1850 liters are produced, how much raw material has been required? We're just going to cross multiply that. 1850 into 20 divided by 19 gives you a value of 1947, right? So which is 1947 here. And now we divide it into proportion. So basically it's going to be 1947 into 8 divided by 20 and 1947 into 12 divided by 20, right? So that comes to 779 and 1168, right? Then we find our variances. Let me just clear the space here. Then we find our variance, right? So that is going to be 21 adverse, and this is going to be 32 adverse. right? 20 and 25, definitely they are going to be adverse values, right? So my mix is favorable and my yield is adverse, right? Mix is favorable and yield is adverse. Students end up making a mistake in this question in the yield, right? Because they don't realize that 1850 is for AQSM and they need to do a SQSM figure out, right? And that is why I tell you that section A and B, you either get zero or you get two, right? So it's more trickier, right? You get it, you make it, or you break it kind of situation happens here. Anyways, let's go to the next one. What does this say now? Budget is a quantified plan of action. For a forthcoming period, budgets can be prepared using a different variety of approaches. So here we have got different statements. We need to connect them with the right kind of budgeting approach, right? So we can go with the ones which we really, really understand and try to relate it with the budgeting. Builds in previous problems and inefficiencies. Recognizes different cost behavior patterns. Focuses employees on avoiding wasteful expenditure. Definitely ZBB. Focuses on controlling the cost. Always extends the budget 1 year into the future. Uses adaptive management processes. Right? What I have done is I have put up budgets which I understand or which normally students do understand. Right? Now going to the incremental budgets. Right? Incremental budget builds in previous problems and efficiencies. Right? Whatever you have in the last quarter piles up in the upcoming quarters. Then you have activity based budgets, which attempt to identify the driver cost in order to formulate the budget. That means it is going to focus on finding out the behavioral patterns of the cost. Rolling budgets are budgets which are continuously updated to the year by adding a new budget period to the. This means that the budget is always extended by 1 year in the future. And flexible budgets based on the controlling of causes, right? So this is how you put on your information in the system. Super simple. All you got to do is you got to make sure that you are putting in info which you do understand and then go for the ones which you are little confused about. As I said again, here it's the same game. You either get your zeros or you get your twos. A lot of students get scared with the with the decision tree, right? And I get a lot of students asking, ma'am, decision tree was not there, and but decision tree in terms of drawing a decision tree is not there in the examination anymore. But that does not mean that you don't have to even calculate the EVs which are based on the decision tree, right? This question specifically focuses on the EV calculation of the decision tree. But the decision tree is already drawn for you. All you got to do is you got to correct the answer. Maybe it's follow to the next page also. No, 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 it's just here, right? What you got to do here is a leisure company owns a number of large health and fitness resorts, but one of is suffering from declining sales and is predicted to make a loss in the next year. As a result, management have identified a number of possible actions: shut down the resort and sell off the assets, undertake the major upgrade and facilitate costing of 4.5 million, undertake minor upgrades and facilitate costing of 2 million. The upgrades are predicted to have variable results, and probability of good results are 0.8% or zero point 0.8, and that of good results for minor upgrade is 0.7. The company is risk neutral and has prepared the following decision trees, which is mentioned up here, and we need to figure out what the company should do, right? So if the company is shutting down, the expense that they have is this much. If the company is taking a major upgrade, okay, the chances of a good result is 11 million, right? 11 million is the chances of the good results. So major upgrade needs to be figured out as 11 million into zero point 0.8 because that is the probability plus what do you call it? Zero point 0.2 into 7.5 million, right? So that comes to 10.3, right? And obviously from the 10.3, you need to deduct your 4.5 because that is the cost that the company will bear. And the value comes to 5.8, right? So we have taken care of the major upgrades. Shutdown is straightforward, 5.75. And now let's look at the minors. So minor is going to be 9 into zero point 0.7, this value, plus 6 million into zero point 0.3. And whatever the total comes, we are going to minus 2 million. And that value comes to 6.1 million, right? Now, from the expected values that we have got, you'd realize that if you shut down, the income that the company will generate was 5.75. If you take a major upgrade, it is going to be 5.8. And if you take a minor upgrade, it's going to be 6.1 million, right? Using the information, identify by clicking the relevant branch on the decision tree which action the company should take. So definitely the company should go for the minor upgrades and take the maximum benefit, right? So we will go with the minor upgrades, right? It gives a cross everywhere. Yeah, so we're going to stick with the minor upgrades. Let's go to the next question. Uh, Limiting factor, throughput, something like that. So there is this company that has got the following production plan for the next 4 weeks, and the figures reflect the full capacity of the level of operations. Planned output is equal to the maximum demand per product. Your company's values are given in terms of selling price, raw material, direct cost, variable overheads, fixed overheads, profits, etc. Planned output is given, direct labor hours per unit is also given. Right? So after this, it has now been identified that labor hours available in the next 4 weeks will be limited to 4,000 hours, right? Rank the product in the order they should be manufactured, assuming that the company wants to maximize profits in the next 4 weeks, right? So what the company wants to do, it wants to maximize its profit. And if we notice, the labor hours are limited to 4,000, right? So what we got to do first is we are going to find out the contribution. Again, if I am adding these values up, I am going to get my contribution, right? So here it's going to be 46, and here it's going to be 52, and here 21, and here 60, right? Now we have our direct labor hours, which is 6, 8, 3, and 2. When we divide the contribution with this, so 46 by 6, 52 by 8, 21 by 3, and 60 by 2, we will find out the contribution per labor hour. So this is going to be 30, this is 7, this is 6.5, and this is 7.67. right? So now we know that which product is going to take what amount of labor hours. The highest contribution definitely is the one that gets the maximum labor hours first. So, uh, just a second. So this product D is going to get the highest ranking, then product A, then product C, and then product B, right? A very simple question. Theory again. DEF company provides accounting services to government departments. On average, staff each member works 6 chargeable hours per day, with the rest of the working days being spent on non-chargeable admin work. One of the company's main objective is to produce the high level of quality and customer satisfaction. DEF company has set its target for the next year. You need to categorize it into economy, efficiency, and effectiveness, right? Increase the number of chargeable hours handled by advisors to 6.2 per day, obtaining a score of 4.7 in terms of the customer service, satisfaction service, and cutting departmental expenditure. So when it comes on expenditure, we definitely know that it is economy, right? When we talk about the rate of work handled, right? That is the efficiency of the staff members that we are looking at. And finally, when we talk about the customer service, it is the effectiveness of the product that the company is providing, right? So this is how we shift it into different kinds of products or targets. Let's go to the next one. Again, a theory. Now, what does this say? It says that different types of information system provide the information which the organization needs for strategic planning, management, and operational control. Match the following characteristics to the relevant information system. Right now, here we have transaction processing system, management processing system, ERPS, and EIS. Right, when we talk about transaction processing system, this is something that we need to relate to the characteristics. So, with MIS, EIS, and ERPS. Let's see the first one. Summarizes internal data into periodic records, right? That is where the management information system comes into picture. Setups the extra net links for customers and suppliers, right? So this is the one where there is an integration, and that is where ERPS comes into picture, utilizes dashboard facilities and interactive graphics. Mostly the executive information system is looking out for that because they don't have so much of time to go through all the individual informations properly and facilitate the immediate processing of the data. And that shows that the company is having transaction processing system, right? So with these values, we can figure out what are the common interactive systems, right? Well, I've already, let's go this one. Yo-Yo company manufactures a single product, the yolk, which is made from mix of two ingredients, X and Y. Again, Yo-Yo company accounts for environmental cost using input-output analysis. Ingredient X costs 15,500 per ton and Y is 825. And ingredients which are wasted in the production must be disposed of at a cost of 150. July production runs 24 tons of product X and 36 tons of Y with the total output of 57 tons. We need to find out the environmental cost. It is actually a very, very simple question, right? What does it say is that the disposal cost is 150. So let me just put that straight. The disposal cost is $150, right? Per ton. Now, the company has used 24 tons of X and 36 tons of Y. So 24 plus 36, 60 tons, right? But the output is 57 tons. That means 3 tons is wastage. Disposal cost is 150. All you got to do is 150 into 3, giving you a value of $450, right? Which is your answer 1. Theory again. Which of the two statements on the life cycle costing are correct? It can be applied, just a second. Yeah, it can be applied not only to products but also to organizations' customers. Often between 70% to 90% of cost determined early in the product life cycle. That is true. This is definitely true. It includes an opportunity cost associated with the production. The maturity phase is characterized as rapid built up in demand. That is true, right? Here I have looked for the correct answers because life cycle costing is something which has got peculiar informations, right? That means when the product is in its earlier stage, that is where all the initial costs are being determined, right? And secondly, at the maturity, when the life cycle costing is at the peak, that is where there is a demand which is rapidly building up, right? So here the demand is the maximum. A company manufactures, just a second, I could not be able to see the question. A company manufactures a product which requires 4 hours per unit of machine time. If you don't read this question, you miss out on this 4 hours. Machine time is a bottleneck resource that there is only 10 machines which are available. Even this is something that students end up missing out. Just use this one. And 10 machines, right, which are available for 12 hours per day for 5 days a week. The product has a selling price of 130, direct material is 50, labor cost is 40, factory overhead is 20, and these costs are based on the weekly production of 150 units. What is the throughput accounting ratio, TPAR? Right now here we have got the formula, which is throughput is equal to selling price minus direct material cost, right? And that you divide with the bottleneck or machine hours. So I'm going to do 130 minus 50 divided by 4, giving me a $20 value, right? And when we talk about the factory cost, it is going to be overhead cost, which is just behind this overhead cost, right? This value is going to be 20, right? And factory cost is 20 divided by 4 plus 40 divided by 4, which is your labor cost, right? Which is giving you a value of 15, right? We can also do 20 plus 40 divided by 4, right? Now you have your return per factory hour. We've got a factory cost. We do A divided by B. So I normally say this is A and this is B. So A divided by B giving you 1.33. You have that value here. Your TPR is sorted. In my classes also I have mentioned, and today also I'm mentioning, that TPR questions are also something which are seen very often in the exam, right? And the formula is also simple. It's a three-step formula, can be achievable, so make sure that you don't miss out on it. Let's go to the next one. Ox Company has two divisions, A and B. A makes a component for air conditioning units, which can only be sold to division B. It has no further outlets for sale. Marginal cost is 100, transfer price is 165, total production 2200, specific fixed cost is 10,000. Coal company has offered to sell the component of division B for 140. If division B accepts, division A will be closed because that requirement is just finished now, right? We need to find out that if division B accepts Coal's offer, what will be the impact on the profit for the year? And you have got your values. Let's see what the answer comes to, right? Now, this is a transfer pricing question, something that we did yesterday, right? So we are going to take it as now because they don't have any outside sellers, it is just going to be 140, which is the selling price minus the marginal cost, right? Because you have a spare capacity or you don't have a external demand, right? So that comes to 40, and now you multiply that with the number of units. So that comes to 88,000, right? Also, the specific cost will be reduced because then if the division shuts down, you don't have to pay for it. So there is a value of decrease in the profit by 78,000. Right? And then we can go to the next one, right? The determinants yeah, identify by clicking on the relevant box in the table shown below whether each of the statements regarding Switzerland and Moon building block model is true or false. So the determinants of performance and quality and innovation, resources utilization and competitiveness. Competitiveness is the result of the determinants, right? So the determinants for performance are qualitative innovation, resource utilization, and competitiveness, right? And this is a result of a determination, hence it is a true value. Second one, standard cost are targets for performance and should be fair, achievable, and controllable. Controllability is a feature of the rewards of blocks, right? And that's why it is a false value. The rewards encourage staff to work towards the standard and should be clear, motivating, and controllable. That is true. It is a performance measurement framework suitable for service organizations, right? And that is also something which is true. That brings us to the end of the first section, section A. We are going to go to the section B, but after a short break of 10 minutes. Okay, so let's take this break and come back with the section B. Hey everyone, let's do the second section B, right? Now, section B has got three scenario questions, and on these three scenario questions, we are going to handle five questions on each scenario. Okay, so that's going to be somewhere around 2 marks for each five questions, coming up to one scenario of 30 marks, right? So let's get started with that one. Mhm. Let's first understand the scenario in one glance and then look at the questions, okay? So what does the question say? Glam company is hairdressing. Just a second, I'll just adjust this. Yeah, Glam Company is hairdressing salon which provides cuts and treatments to clients. All cuts and treatments at the salon are carried out by one of the salon's three senior stylists. The salon has two salon assistants and two junior stylists. Each client attending the I want to actually keep on writing while I'm discussing so I don't end up missing on the info. Yeah. Right. So there's a salon. It does two things, cuts and treatments. Right. Cuts are carried out by one of the three salon stylists. So they have got three senior stylists here, two salon assistants, two junior stylists. Every client attending the salon is first seen by the salon assistant who washes her hair, then by a senior stylist who cuts or treats them, and then the junior stylist who dries the hair. The average time spent on each is given on cuts and treatments by different people who are working in the salon is given. The salon is open for 8 hours each day, 6 days per week. It is closed for 2 weeks each year. Staff salary is 40,000, which is each year for seniors, 28,000 for juniors, 12,000 for the assistant. Now, if we notice the values given here are on per annum basis. So first thing I want to do is I want to figure out how many hours is the company's staff working on a yearly basis, right? So that comes to 2,400 each year, right? So that is hours, right? 2,400 hours. The cost of cleaning products applied when washing the client hair is 1.5. So that is your cost. Additional product for treatment is 7.4. Other salon cost, the total cost is 1,06,400. Glam charges, these are the selling prices for cuts and treatments. And this is all we have got. First question is, what is the annual capacity of the bottleneck activity? The question says that the senior stylist has been correctly identified as the bottleneck activity, right? So, what is the annual capacity of the bottleneck activity? Is the question. Annual capacity of the bottleneck activity, right? Now, which happens to be the senior stylist. Now, senior stylist is working each of these days, right? And therefore, the senior stylist has got total of three, right? So 24 hours into three stylists. That means the hours with senior stylist is 72 hours, right? Now, senior stylist takes 1 hour to do the cut, right? And they take 1.5 hours to do the treatment. That comes to 4,800, right? So I'm going to go with option C, 7,200 cuts or 4,800 treatments. Next question. Calculate the TPAR for both the services, right? Now we have got the values here for TPAR. We have got the selling price per. Let's go for the cuts first. So my TPR is going to be selling price, which is $60, minus 1.50, which is direct material cost, divided by the TPAR. Cost per hour is given, which is 42.56, right? But yeah, before that, I have to find out my cost, right? So my return per factory hour is going to be 58.50, and then you divide it by 42.56, which is my cost per hour, which brings to 1.37. So my cut is 1.37. Same for treatment. For treatment, the salon is charging 110, and the cost that is taken is 1.50 plus extra 7.40. So that is going to be 8.90. Treatment takes 1.5 hours. So that is going to be 67.40. Again, divide by 42.56. That gives me a value of 1.58. I told you TPAR is important, comes very often in the exam. So, we just cannot afford to miss it at all. We need to make sure that we know the formulas perfectly, right? Let's jump into the next question, which happens to be a theory question. How can the TPAR be improved? Right now, normally TPAR is improved if the cost is reduced, the operating expense is reduced, or the selling price is increased, right? Because for TPAR, the important things that are required is selling price and cost. So if the selling price increases or the cost decreases, TPAR will be better. What would be the effect of the bottleneck if the salon employed another senior stylist? Now, if the salon is employing another senior stylist, that means the number of hours by the senior stylist will increase, right? So first it was how much? 2400 into 3. That will be 2400 into 4, right? So the number of hours of senior stylist would be how much? 9600, right? Now we need to figure out that would that be enough for the company to go ahead or not, right? So let's figure out. Right, again we go to the same cuts, treatments. This is the assistant, this is the senior stylist, this is the junior stylist, right? So assistant is going to be, how many assistants? They have got two salon assistants and two junior stylists and three seniors, right? So the cuts are going to be zero point 0.1, right? So two salon assistants, that means 2400 into 2 into zero point 0.1, and 2400 into 2 into zero point 0.3, right? So with the same logic, now this value comes to 48,000, and this value comes to 16,000. So I have to divide it. I'm so sorry, I have to divide this value. So I'm just going to take this and divide it with the time taken, right? Same logic when we use for senior stylist, the value becomes 7,200 and 4,800, right? And the junior stylist is 8,000, 9,600. Now, if the amount of, I'm so sorry, if the amount of senior stylist increases by one, right? So this value becomes 9,600, right? So here the bottleneck is gone, and now here the senior stylist bottleneck would not remain, right? And this one is going to be 9,600 divided by 1.5, right? So here there is no bottleneck for sure. In terms of cuts, in the treatments, it is going to be 6,400. So even here in treatment, it is still going to be the bottleneck, and that is why senior stylist time will be bottleneck only for treatments, definitely not for cuts and not for both. And there will be no longer bottleneck is also untrue. The question is based on theory of constraint. It says which of the following statement regarding the theory of constraints are correct. It focuses on identifying the stages of congestion in a process when production arrives more quickly than the next stage can handle. It is based on the concepts that organization manages three key factors: throughput, operating expense, and inventory. It uses a sequence of focusing steps to overcome a single bottleneck, and it is applied to the management of all limiting factors. So the answer here is 1 and 2 because it focuses on the identification of stages of congestion in a process and tries to overcome that for sure. It is based on the concept to manage three key factors: throughput, operating expense, and inventory. Next question is based on Chair Company. Chair Company has several new products in the development. Information relating to three of these products are given as follows. So there is this luxury car seats, which are estimated. Luxury car seats, their estimated labor time is, so this company makes basically three products. Just a second. Yeah, so there are three products that the company is making. For first, they have several new products in development, and here we are talking about the three products that they are making. The first one is called the luxury car seat. The estimated labor time for the first unit is 12 hours. Learning curve is 75%. Expected for the eighth hour. So learning curve is hit by the eighth unit is produced. Cost of labor is $15 per hour. The cost of material and other variable overheads is expected to be $230 per unit. Chair company plans on pricing the seat by adding 50% of markup on the total variable of the variable cost, with the labor cost being based on the incremental time taken from the eighth unit, because from the eighth unit it is going to achieve its learning curve, right? Next is the high chair, another product which chair company has in development in a new design of high chair for feeding young children. Based on previous experience of producing similar products, chair company has assumed that the learning rate here will be 85%. Would apply to the manufacturing of new design for the first phase, and then after the management realizes the learning rate has been 80%. That means the learning has been quicker than expected. The next one is office chair, which has developed a new type of office chair and is trying to formulate a budget for this product. They have decided to match the production level to demand. However, the demand for this chair is uncertain, and probabilities are mentioned here. Right? So you have your worst option where 10,000 demand and probability is zero point 0.3, most likely 22 at probability zero point 0.5, best possible is 35 and probability is zero point 0.2. The selling price is 25, variable cost is 8 for the level up to 25,000 units. If the production level is higher than 25,000 units, then the variable cost per unit will decrease by 10%, which will happen in the best possible outcome where the company produces 35,000. Total fixed cost is 75,000. and share company uses cost plus pricing method. So we have got learning curve, we have got EV that we are going to do here. Let's see what the first question says. In the relation to luxury cars seat with the labor cost of 8 unit, what is the labor cost of the 8 unit? Now this is a simple learning curve question, right? The formula is y is equal to ax raised to b, where b is equal to log r raised to log 2, where r is given, which is of 75%, and then we have to do with log 2, right? So if you're using the Excel sheet, it is going to be the value of log 75 divided by log 2 is going to be 415. Right? Now you need to put it into the formula. So it is going to be y is equal to a multiplied by x raised to b, right? Where the a's value is going to be 12 hours multiplied by 8. Exponential is what you use in the Excel sheets, minus 0.415, right? So you get your value, which is 5.62, and this is for your 8th unit, right? So for total 8 units, it will be 5.062 into 8, coming to 40.50 hours, right? The next one is we need to find out the 7th unit. So the same logic, but here we are going to do 12 into 7. Exponential is the formula or the symbol that you use for Excel, and hence I'm using the same one, right? Minus 0.415. This gives you 37.46 for the 7th unit. For total 7 units, 37.46 into 7 you will do, right? And you'll get 40, sorry, you'll get 30. This value is 5.35. And the total for 7 is 5.35 into 7, which is 37. Now to find out the 8th unit's value, I'm going to do total of 8 minus total of 7, which is 40.50 minus 37.46, right? So that comes to 3.04, which is the answer over here. If you remember in the learning curve, this is how we used to do. We used to find out the eighth value multiplied with the total 8 values, 7th value multiplied with the total 7 units, 8 units minus 7 units, you get your 8th units hours or cost, whatever you're finding right there. Let's look at the next question. The first phase of production is now completed for the new car seat. The first unit actually took 12.5 hours to be made, and the total time for the first 8 units was 34.3. What you need to find out here is what is the learning effect that came to at the end. That means you need to find the value of R. So now if you see, the first unit is taking 12.5, right? And the 8 units, so like 2, 4, and 8 units is 34.3, right? So you have to do 12.5 multiplied by r raised to 3, because it's 3 jumps, 1, 2, and 3 jumps, right? So you just need to formulate this, which is 34.3 is equal to 8 units multiplied by 12.5 5 into r raised to 3. When you are calculating this formula, you'll get 70. R is equal to 70. That means it is a 70% rate, right? In relation to the new design of high chair, which of the three following statements could explain the actual rate of learning differed from the rate which was expected? Right? So if you notice, company expected the learning rate to be 85%, but the learning rate was 80%. That means the staff members took less time to learn. And that's why I've selected these 3 points here. Staffing level was stable during the first manufacturing phase. Assembly of the cars was manual and very repetitive, and there were minimum stoppages in the production progress, right? All the rest of the three are the ones which might have increased the learning curve rate, and that's why I've not taken them on board here. Using an EV approach, what is the expected budgeted contribution of the office chairs to the nearest whole? We have got the values which can show us the EVs, right? So demand is given, but here we need to find out our cost, right? That means because the expected values are there, right? So we are going to take the demand and we are going to multiply that with the contribution, right? So for first and the second possible outcomes, the contribution remains constant because see, selling price is 8, variable cost is, so selling price is 25, variable cost is 8. So if you want to find out the contribution, it's going to be 25 minus 8, which is 70, right? And this value remains constant until the production level of 25,000. When the production level is increasing, the variable cost will decrease. So this 8 will decrease by 10% and become 7.2, right? So your value for the third outcome is going to be 25 minus 7.2, right? Which comes to 17.8. Correct? All you got to do is you got to multiply the demand with contribution with the probability. Same goes for the second one. And for the third one, it's going to be 17.8 into zero point 0.2. The answer comes to 362,600, right? Once you get all the values, all you need to do is you need to add them up, right? Whatever the value comes. The total of all the values is 362,600, right? You must have noticed there's a lot of theory also that is coming in, right? So it's not always necessary that you prepare for yourself as only a calculative paper. I mentioned it earlier also, and this paper, this specimen paper, proves the same thing, right? That it is not completely a calculative paper. Identify by clicking on the table below whether each of the statements regarding cost plus pricing strategy is true or false. So I already mentioned it here. Marginal cost plus pricing is easier when there is readily available variable cost. Full cost plus pricing requires the budgeted level of output to be determined. They both are true. And false is cost plus pricing is strategically focused approach as it accounts for external factors. Cost plus pricing requires that the profit markup applied by an organization is fixed. Next and the last one in your section B, which is about sofas. So the High Life company makes sofas. It has recently received a request from a customer to provide one-off order of sofas in excess of normal budgeted production. The order would need to be completed within 2 weeks, and the following estimates have already been prepared. So here the estimates are given. Your direct material is given, skill labor, materials value is, so the fabric is 200 meters, square meters at 13 per square meter. Wood is 50 square meter at 8.2. Skill labors are 200 hours at 16. Semi-skilled are 300 hours at 12. Factory hours are 500 hours at 3. Total production cost is given. Your general fixed overheads are 10% of the total production cost, and this is the total cost of 13,321. The fabric is regularly used by High Life, and there are currently 300 square meter in the inventory, which costs 17 per meter, and the current purchase price is 17.5. The wood is regularly used by High Life and usually costs 8.2. However, the company's current supplier's earliest delivery time for the wood is 3 weeks. An alternative supplier could deliver immediately, but they are charging 8.50. High Life company already has 500 meters in inventory, but 480 is to be needed to complete other existing orders in the next 2 weeks. The remaining 20 is not going to be needed until 4 weeks. Skilled labor force is employed under the permanent contract of employment, under which they must be paid a 40 hours per week labor, even if the time is idle due to the absence of orders. Their rate of pay is $16 per hour, although any overtime is paid at time and half. In the next 2 weeks, there is a spare capacity of 150 labor hours. Of the $3 per factory hour overheads cost, 1.50 per hour reflects the electricity cost of running the cutting machine, which will be used to cut the fabric and wood for the sofa. The other 1.50 per hour reflects the cost for the factory's supervisor's salary. The supervisor is paid an annual salary and is also paid a $15 per hour for an overtime he works. Supervisor will need to work 20 hours overtime if this order is accepted. The quotation now needs to be prepared on a relevant cost basis so that High Life Company can offer a competitive price as possible for the order. What is the cost of fabric and wood which could be included in the quotation to the nearest whole? Right? Now you need to determine the value for a quotation that you want to give, right? Normally, the company needs 200 meters of the fabric, right? We'll first go to the fabric only, right? So the company needs 200 meters of the fabric, and the company regularly uses 300. There are currently 300 inventory, which is costing them at 17, right? Fabric is in regular use, so the replacement cost would be the relevant cost here, which is going to be 200 into 17.50, right? So even though the company has got 300 meters, it is going to be used, right? And because it is going to be used, the problem is the company is not able to use it for the new product. That means it has to purchase new product or new fabric. And that is why the fabric cost is going to be 200 meters into 17.5. So that comes to 3,500. When it comes to wood, it's 50 meters that the company requires. The wood is also in regular use and they did have a spare capacity, right? So the spare capacity was how much? 20 meters, right? So that is something that the company is going to use, the spare capacity plus the 30 meters that it needs, 30 square meters that it has to purchase at the prevailing rate. So the existing wood that the company has is 12 square meters, which can be used at the price at which they have earlier bought. Plus, they do need extra, right? Because they will need 50. So 30 square meters into the market price of 8.5. That comes to a total of 419, right? What cost should be included in the quotation of skilled labor and semi-skilled labor to the nearest whole? Very similar to the previous question, right? How much of them do they need? Skilled labor 200, semi-skilled 300, 16 and 12 is the price, right? There is no spare capacity. No, the skilled labor do have actually the spare capacity, right? So the skilled labor's value, the skilled labor force is employed at 40 hours, the rate is 16. Overtime is paid time and half. In the next 2 weeks, they will have a spare capacity of 150 hours, right? Company needs 200 hours. So that spare capacity they are going to utilize, right? And the rest of them is going to be paid at 150, one and a half, right? So one spare capacity of 150 is there. 200 is total required of skilled laborers minus 150, which the company already has, so that is not to be charged. But the rest of the 50 has to be charged at 1.5 of 16, right? So that value comes to 1200. So skilled labor is at 1200, right? The next one is semi-skilled laborers. Semi-skill is required 300. There is no spare capacity of semi-skill, and they are currently paid $12 per hour and time and half, right? So if there is no spare capacity and the existing laborers are made to work, they'll be paying them time and half. Time and half means 12 plus 6, which is 18. But if they are going to hire them from the local agencies, it will be $14. So overall, only if we look at the time, the price, semi-skilled from outside would be cheaper, right? So the semi-skill is going to be 300 into 14, which is the payment you go to a local agency, right? So it comes to 4,200, right? What is the cost which should be included in the quotation of factory overheads to the nearest whole? Factory overheads right now are 500 hours at $3 per hour. Of the $3 per factory hour, 1.50 reflects the electricity cost of running the cutting machine. To cut the fabric of wood and sofa, 1.50 reflects to the cost of supervisor's salary. The supervisor is paid an annual salary, is also paid $15 per hour for any overtime he works. The supervisor will need to work 20 hours of overtime for this company. The electricity cost that will be required is directly relevant, so it is going to be 500 hours into 1.50, right? The supervisor is already paid the salary, so that is not required, but the supervisor has to be paid for 20 hours of overtime. So that will be included here, right? So I'll just sum this up again. This is going to be 500, how many years? Yeah, 500 hours into 1.50 because 1.50 is the amount that is used for electricity cost, cutting machine, fabric and sofas, right? So whatever this comes to, which is 750 plus the supervisor's salary is not included, but this 20 hours of extra time that he's doing, that we got to pay. So the total cost is 1050, right? Which statement currently describes the treatment of general fixed overheads when preparing the quotation? So the answer is the overhead should be excluded because there are no incremental costs, and the fixed overhead which are directly related are going to be the overhead that should be included in the relation of the production cost also, right? Which four of the following statements about relevant costing are true? So I've already mentioned them. Fixed costs are always general in nature and therefore they are never relevant. Avoidable costs should be saved if any activity did not happen and so are relevant. Common costs are only relevant if the viability of the whole process is being assessed, and differential cost in a make or buy decisions are not considered to be relevant. That brings us to the end of section B. We have got one more section, but let's do it after a break of 8 minutes, right? Let's start with the last section, the section C. Now, these are two 20 marker questions, okay? So we need to make sure that we are justifying those 20 marks. The good part about section C is you are going to get your Excel sheet, so you will be able to solve your answers, put your answers, everything there comfortably, right? You don't need to use the scratch pad or use the calculator for the same. So this is going to be a little easier for you in terms of calculations. Let's see what the question says. Carrot Company is an electronic company which takes two types of televisions, plasma screen TVs and LCD TVs. It operates within a highly competitive market and is constantly under pressure to reduce the prices. Carrot Company operates a standard costing system and performs a detailed variance analysis of both products on a monthly basis. Extracts from the management are being given. Total number of units made and sold 1400. Let's read the notes that are relevant to it. The budgeted total sales volume for TVs was 1180 units, consisting of an equal mix of plasma TVs and LCDs. Actual sales volume was 750 plasmas and 650 TVs. Standard sales price is 350 per unit of plasma and 300 per unit of LCD. Actual sales price achieved during November was $330 per unit for plasma and 1290 per unit for LCD. The standard contribution for plasma TVs and LCD TVs are 190 and 180 units per unit respectively. So we have got all the values that are required for finding out the sales and the standard price or contribution. The second is the price variance, which is 28,000 adverse. A sole reason for this adverse was an increase in the purchase price of one of the key components X. Each plasma TV made and each LCD TV made requires 1 unit of component X, for which Carrot's standard cost is $60 per unit. But due to the shortage of the marketplace, the market price for November went up to $85 per unit. Carrot Company actually paid $80 per unit for it. Each plasma TV, the third one, labor variance is also higher, adverse 60/50. Each plasma TV uses two standard labor hours, and each LCD TV uses 1.5 standard hours of labor. The standard cost for labor is $14 per hour, and this also reflects the actual cost per labor hour for the company's permanent staff in the November. However, because of the increase in sales and production volume in November, the company also had to use temporary labor at the higher cost of $18 per hour. The total capacity for Carrot Company's permanent workforce is 2,200 hours production per month, assuming full efficiency. In the month of November, the workforce were wholly sufficient, taking exactly 2 hours to complete each plasma TV and exactly 1.5 hours to produce each LCD TV. The total labor variance therefore relates solely to the temporary workers who took twice as long as the permanent workers to complete their production. Right? So because of the displacement of the labor variance has an adverse of 60 and 50, 6050. What are we supposed to do in this question? We need to calculate for the month of November, showing all workings clearly, the sales price variance, the volume variance with the contribution, material planning and operational variance, and labor rate and labor efficiency variance. So let's start with that. Now here I'm directly going to use the Excel sheet because we have got the Excel sheet, so we might as well use it. Right? Now we need to find out the first thing, which is our price variance, right? Let's see if it's visible. Yeah, right. So I'm going to do the sales price variance. We have two products, so I'm just going to write plasma and LCD, right? And our actual price, standard price, difference, volume, and variance. Let's check if it's visible. Yeah, perfect. Right? So now the plasma's actual price, that is being that the the price at which it has been sold, is 330, this value, right? So I'm going to write that 33330. LCD is 219. The company expected the price to be 350 and 300. See, this also mentioned here, 350 and 300, right? So let's put those values here, 350, 300, right? So the difference is standard minus actual will give you a negative here, which is minus 20, right? And here it is going to be minus 10. The volume that it has actually sold is 650 and 750, right? So I'm going to write 750 units and 650 units. The variance is going to be is equal to this value multiplied by this value, right? And the same formula, if you see, I can just drag it down, control X. Right, so I'm just going to drag down the formula, right? So we get variance, and then I'm going to do this plus this, right? So a negative or a adverse variance of 21,500 for sales price. Now let's look at the volume, right? Same plasma LCD. I can also copy paste it from the top actually, right? So actual volume, standard volume, again the difference, right? Here we'll do a standard margin and the variance. Actual volume that the company sold have been 750 and 650. So I'm going to write 750 and 650, right? The company expected to sell equal quantity of both the products. So the company wanted to sell 1180 units, equal quantity of both the products, right? So 1180 divided by 2, and which comes to 590, right? Standard minus actual is what we happen to do here. So I'm just going to put the formula is equal to 750 minus 590, right? And use this, drag this formula down here, right? Your standard margin is contribution is given, right? So 190 and 180. See, 190 and 180. So I'm just going to use those values. And then I find out the variance, which is going to be 160 multiplied by 190, and drag this down, right? Let's see what the total is. 41,200 favorable. So we have got our 4 marks, easy peasy. Sales price and contribution volume, sales price and sales volume contribution variance found out and sorted. We need to find out the price planning and material operational variance, right? Now for that, we can look at this value, the second one, right? Now, when we talk about the planning variance is going to be original target price minus general price, right, into quantity. Now, the company's original target price was obviously $60, but that increased to a general market price of 85, right? So that is going to be is equal to 60 minus 85, and the quantity that they purchased was for 1400 units, right? So that comes to be 35,000 adverse, right? Now, when we talk about the operational variance, that is going to be general price general market price. General market price minus actual price, again multiplied by the quantity. Now, when we purchased it, when the managers purchased it, they purchased it at $80, right? And the market price was 85. So it's going to be 85 minus 80 multiplied by 1400, right? Which happens to be a 7,000 favorable, right? Operational is 7,000 favorable. Planning is 35,000 adverse. Next one, labor rate and labor efficiency, right? Now, when we talk about the labor rate, each plasma TV uses 2 standard cost for labor and each LCD TV uses 1.5 standard hours of labor. The standard cost for labor is 14 and it reflects the actual cost. However, in the increase in sales and production volumes in the November, the company also had used temporary labor with a higher cost of $18 per labor. Right, so with this we have to calculate. Now if we are finding out the labor rate variance, it's basically standard labor rate minus actual labor rate into actual hours worked. Actual hours worked for temporary staff is going to be figured out, right? So first we need to find out how many labor hours are required. So LCD requires 1.5 and plasma requires 2 hours and LCD requires 1.5. And how many plasmas company made was 750 and LCDs are 650. So total labor hours utilized is something that we need to find out, right? Company has got a permanent workforce for 2200, right? So whatever is excess of that is going to be something that is used by the temporary staff members, right? If you notice, the last line says that the total labor variance therefore relates solely to the temporary workers who took twice as long as the permanent workers to complete their production. That means they have taken double the time to complete the production, right? When we talk about labor variance, we have to calculate it with this hours. Okay, so it's little complicated. A 5 marker. I just try to do it for you right here. Right now, first we need to figure out the hours that are being taken, right? And these hours are taken by the temporary staff members, right? So the first thing that we do here is we are going to find out the total hours to be taken, which is 750 multiplied by 2 plus 650 multiplied by 1.5, right? Now, this is going to be the total hours, out of which company does have a permanent staff of 2,200, right? So if I want to find out um, outsourced staff, that is going to be is equal to this value minus 2,200, right? But this outsourced staff is taking twice the time, right? So 275 into 2, that comes to 550 hours utilized. Now, if we want to find out the rate variance, this is going to be is equal to $18 is what they are paying, right? Which is $4 extra than what they would have paid, and for hours, which is also extra. So that is going to be 2,200 adverse, right? So that is about the rate. They have overpaid $2,200. And when we talk about efficiency, efficiency is definitely less than the labors that are in-house, right? So when we talk about the efficiency, it is going to be if their in-house workers would have done it, then they would have done it in 275 hours. But the outsourced laborers are taking twice the time, right? And that is multiplied by 14, which is the standard given, right? So it is going to be 3850 adverse, right? 3850 adverse. First and second are comparatively easier. Third one takes little bit of more of your time because we need to read the last lines pretty decently to understand the rate variance and the efficiency variance, right? Explain the reason why Carrot Company would be interested in material price planning variance and material price operational variance, right? So when we are writing this answer, the first thing we got to do is we got to write or we got to define planning and operational variance. Then we can justify why planning is uncontrollable by managers and operational is controllable by managers. Right? So talk about these things. And this is why you can explain that, despite of the increase in the price of the raw material from 60 to 85, the managers did show a favorable operational variance by getting it for $80. So relate it to the answer that is being calculated earlier, right? So this is how you handle your 20 marker. Let's go to the next question. We need to assess the financial performance. Okay. Thatcher International Park is a theme park and has for many years been a successful business, which has traded profitability. About 3 years ago, the directors decided to capitalize on their success and reduce the expenditure made on their new thrill rides, reduces routine maintenance where possible. This looks like a ratios of financial performance question completely. 20 marks or 14 marks for analyzing whatever ratios you can find out and discuss on them, and 6 marks for the other part of the question. The situation here is about a theme park which has been running profitably for many years, but now the directors think that they want to capitalize on it, and that is where they are reducing the routine maintenance on the company, right? And made a commitment to regularly increase the admission price. Once the admission price is paid, customers can use any of the facilities and rides for free. These steps increase profits considerably, enabling good dividends to be paid to the owners and bonuses of the directors. The two last year of financial results are as follows. Sales have increased, but that can be because of the increase in the admission tickets. Wages have decreased, which means either staff has left the company or the staff are being underpaid. Maintenance, as they mentioned, they want to cut it down. They have done it. Repairs have increased, and this can be predominantly because the maintenance are not happening. Directors' salaries, as they said, they want to capitalize, so they're increasing it, and so is the director's bonus. Other costs have reduced because they're cutting down on the maintenance. Again, it is relatable, and the wages also. Net profit has increased. Again, the same reason of cutting down on cost and increasing of the admission prices. Book assets of the values have been deteriorated. It shows that there are no new assets that the company has purchased in this 1 year. Dividends have paid extra, as it says it wants to capitalize. It is showing up here. Visitors have decreased. That shows that the company's demand has decreased, but this increase in the sales revenue is predominantly because of the increase in the admission price. TIP operates in a country where the average rate of inflation is around 1% per annum. You need to calculate the financial performance of TIP, right? So, because it is a financial performance, we are going to look at the year on year growth of sales, we can say. Then we can do the, you know, increase in the admission price tickets. And how do you find out if we divide the number of visitors with the sales price? We will find out the admission price increase, year on year increase in admission ticket price. Directors pay, we can talk about bonus, we can talk about wages reduction, loss of customers, profits, return on assets. I mean, all the values in financial results can be calculated year on year. You can also calculate NPM year on year. Hmm. You can also calculate your ROI if you want return on investments year on year, right? And then you need to discuss, right? As I mentioned, whatever it was, the sales price is increased, but that is typically because of the increase in the admission price, but and not because of the amount of customers that are there. Second, the maintenance company has mentioned they are reducing, they have already reduced. Wages have reduced. That shows that the company is cutting down on the staff members also. Repairs have increased because, if the normal maintenance happens, then the repairs would not be required. But since this is a theme park, it's so important for them to, take care of their health and safety, and they cannot afford to have anything which is unrepaired, right? uh, Directors salary they wanted to increase, they have increased. Directors bonus they wanted to increase, and they have increased. Other costs have decreased because they are cutting down on the expenses, net profits, and yeah, that's what I said. You all have to, you for 14 marks, all you got to do is say about 6 to 7 marks. Let me just see how they have awarded the marks here. Yeah, right? So the focus is more on the analyzation part than on the calculation parts, but the calculations are pretty simple. So expect somewhere around 4 marks that you can get about there, and 10 marks would be focusing on how you are analyzing the performance, right? And the performance is clear and simply analyzed from this part itself. It's not like very, very difficult ratios that you got to find out, but it's simple ratios which will not take a lot of time, and that's why the focus is more on analyzation. Let's go to the next one. The same question, but with a little information here. During the early part of 2014, Tip employed a newly qualified management accountant, and he quickly became concerned about the potential performance of Tip. And to investigate his concern, he started to gather data to measure some non financial measures of success. The data he has gathered is shown below. So, Table 1 has got some data. Uh, Hours lost due to breakdown is increased almost three times, more than three times. Average waiting time has almost increased by 50%. Tip has 50 rides of different types. It opens 360 days of the year for 10 hours each day. Right now, what we need to do, we need to assess the quality of the service which Tip provides to its customers using table 1 in any other relevant data indicating the risk that the company has. Right now, as I said, there are many risks that the company has because they are into theme park, and theme park needs to make sure that the health and safety is taken care of properly, right? So reliability of the rides will also reduce because if you notice, the maintenance has reduced. The company is cutting down on maintenance cost, right? And for organizations who are into amusement parks, it's very very important to assure that the rides are being maintained correctly, right? So the breakdowns has increased three times, as I said. So last year, 9,000 hours were wasted, and now 3,200 32,000 hours has been wasted, which is not good. Second, definitely visible, the average time has also increased, so which might have reduced the number of visitors, right? If the rides are not working, if the maintenance is not done properly, and the queue time is high, plus the admission price is also high, that means that there would be less people who would like to come here, right? Safety and risk is also something which needs to be talked about now and again. Mm, the lack of routine maintenance could easily lead to an accident or injury to a customer. Increased competition, yes, see, this is something which is from the assumptions point of view, that there are chances that other companies who are in the same platform, or the companies who find potential here, would want to start their business, and this is where Tip will have a big slash, because Tip is going to Tip is not going to make it because of the disadvantage that it is portraying here, right? So this all you can write for your 6 marks. So simple point, right? So that brings us to the end of this YouTube revision. That brings us to the end of the sample paper. Uh, in this 3 days time, what I have tried to do with you is I have tried to add value in terms of how to make sure that you are going to give your exams correctly in terms of your strategy, in terms of your spontaneity, in terms of logical reasoning, right? Apart from this, we have touched three important topics, which all three of them happen, two of them happen to be seen here, right, in the sample paper also. But individually for all the topics, we have done one question each in my yesterday's class, and today, obviously, we solved a sample paper on the ACCA CBE platform itself, right? So now the ball is in your court. I have, you know, made sure that I give you all the tips in my first class itself. So if you have not watched the first day's YouTube revision, which was held on the 6th of November 2023, you should watch it. The videos are in English and Hindi both, and this is how you will be able to add value to your upcoming performance management paper, right? So on that note, I would wish you all the best for your examinations. Your exam for performance management would be very very important for you. And if you start practicing from now, we still have time, as I have been saying you since past 2 days. And yes, we do have time. If you practice from today itself, from the 8th of November, we have enough time to make sure that we are going to cover most of the topics that are available for performance management, right? So start working from today itself. All the best and come out with flying colors.